Hi everyone, welcome back to G2's weekly market update, where we break down the key developments shaping global markets. For the week ending 13th March, global markets remained under pressure as ongoing tensions in the Middle East kept oil prices volatile and raised concerns about potential supply disruptions through the Strait of Hormuz. Investors also weighed mixed economic data and persistent inflation signals across major economies. Let us take a look at how markets performed across regions this week. United States. Major US stock indexes declined for the third consecutive week as geopolitical tensions and volatility in oil markets weighed on investor sentiment. Among the major indexes, the S&P Midcap 400 and Dow Jones Industrial Average led the declines, falling 2.03% and 1.99% respectively, while the Nasdaq Composite held up relatively better but still dropped 1.26%. Inflation data showed mixed signals. Core CPI rose 0.2% in February, in line with expectations, while the annual rate held steady at 2.5%. However, the Federal Reserve's preferred inflation measure, core PCE, increased 0.4% in January, pushing the annual rate to 3.1%, its highest level since early 2024. Economic growth estimates were also revised lower, with fourth quarter GDP growth adjusted down to 0.7% from the initial 1.4%, reflecting weaker consumer spending, exports, and investment. Housing data offered some positive signs. Existing home sales rose 1.7% in February, while housing starts increased 7.2%, suggesting gradual improvement as affordability conditions ease. In bond markets, treasury yields moved higher, leading to negative returns. Investment grade corporate bonds underperformed treasuries, while high yield markets remained volatile amid shifting macro headlines. Europe. European markets ended the week slightly lower as investors assessed the potential impact of rising energy prices and geopolitical tensions. The Stocks Europe 600 index fell 0.47%, with Germany's DAX down 0.61% and France CAC 40 declining 1.03%. Italy's FTSE posted a modest gain of 0.37%, while the UK's FTSE 100 edged down 0.23%. European Central Bank President Christine Lagarde said the ECB stands ready to act if rising energy prices threaten to push inflation higher, while noting that Europe is better positioned to absorb shocks than in previous years. Economic data across the region was mixed. Germany factor orders fell sharply by 11.1% in January, while Eurozone industrial production declined 1.5%, marking its largest drop since April 2025. In the UK, economic growth stalled in January, highlighting continued weakness in services activity. Japan. Japanese equities declined during the week, with the Nikkei 225 falling 3.24% and the Topix index down 2.36% as investors monitored energy market developments. Japan's heavy reliance on Middle Eastern oil imports leaves it vulnerable to supply disruptions. In response, Prime Minister Sanai Takaichi announced plans to release portions of Japan's strategic oil reserves and introduce subsidies to limit domestic gasoline price increases. Meanwhile, the 10-year Japanese government bond yield rose to 2.22%, while the yen weakened to around 159.5 per dollar, approaching levels that previously triggered currency intervention. Japan's economic data showed improvement, with fourth quarter GDP growth revised up to an annualized 1.3%, supported by stronger business investment and consumer spending. China. Chinese markets were mixed during the week. The CSI 300 index edged up 0.19%, while the Shanghai Composite declined 0.70% and Hong Kong's Hang Seng index fell 1.13%. Consumer inflation rose 1.3% year over year in February, the fastest pace in over 3 years, supported by Lunar New Year holiday spending. Core inflation increased 1.8%, the highest since 2019. Meanwhile, producer prices remained in deflation, though the pace of decline eased as metals and oil prices rose. China's trade data was strong. with exports surging 21.8% in the first 2 months of the year, driven by global demand for technology products and electronics linked to growing artificial intelligence sector. Technology stocks also gained attention following the emergence of OpenClaw, an open source AI agent capable of executing tasks autonomously, sparking investor interest in the next phase of AI development. G2 takeaway. This week highlighted how geopolitical tensions and energy market volatility continue to influence global markets. Rising oil prices have increased concerns around inflation and growth, while investors remain cautious amid mixed economic signals and policy uncertainty. That is your G2 weekly market update. Thank you for watching. Do not forget to like, subscribe, and share for more weekly insights from G2. We'll see you next week.